This is Stock Market Daily News for January 20th, 2026. I'm your host, and here's a fast-moving recap of everything you need to know from yesterday's trading session. U.S. equity markets dropped into the red as the S&P 500 closed down just over 0.9%. The Dow Jones fell 1.1%, and the Nasdaq lost nearly 1%. Investors watchfully weighed mixed guidance from big banks, renewed concerns about tech sector valuations, and fresh macroeconomic signals. Stay tuned as we break down the major movers and what they signal for your portfolio. Let's get into the stories shaping the market. First, tech suffered a reality check. Microsoft shares declined 2% to finish at $394 after analysts flagged concern about slowing cloud growth in the company's latest earnings update. Cloud revenues grew, but at a slightly softer pace than Wall Street expected. That fueled a broader slump in large-cap tech as the sector saw profit-taking following a rapid run-up this month. For investors, this is a reminder that even the biggest tech names carry short-term valuation risks, especially when earnings momentum cools. Next, financials took a hit after Goldman Sachs reported quarterly earnings. The stock dropped 3.7% to close at $332 as earnings missed estimates on weaker trading and investment banking revenues. CEO David Solomon pointed to challenging market conditions and slower deal flow. This underscores ongoing uncertainty for the banking sector as rate cuts still seem distant and lending standards tighten. In consumer staples, Procter & Gamble offered a bright spot, rallying 1.6% to $160 after raising its fiscal year forecast. The company posted strong demand across personal care and home cleaning brands, even as inflation pressures persist. For defensive investors, staples like Procter & Gamble remain an anchor amid choppier markets. Energy stocks reversed some recent gains as crude oil prices slid. ExxonMobil fell just over 2%, closing at $101, tracking West Texas Intermediate crude futures down nearly $3 per barrel. This was driven by renewed demand concerns and signs of growing U.S. stockpiles. If the trend continues, energy sector volatility could rise as traders react to every supply and demand headline. Rounding things out, the VIX, Wall Street's fear gauge, ticked up to 19, its highest level in 3 weeks. That jump reflects heightened caution as earnings season ramps up and economic data sends mixed signals. Elevated volatility could mean sharper swings through the rest of January. Risk management remains front and center for all active traders. Recapping yesterday, S&P 500 down almost 1%, Dow off over 1%, Nasdaq trailing by nearly 1%. The big themes? Earnings headwinds for tech and banks, resilience in select consumer names, and ongoing volatility as investors seek clarity from earnings and economic data. Looking ahead, keep your calendars ready for the next major earnings reports and Thursday's jobless claims. For daily market updates, make sure you're subscribed and follow us wherever you listen. Thanks for joining Stock Market Daily News. See you tomorrow.